Hi, and welcome to another daily recap. So today I'm going to recap day 113, and it's October 10, 2024, Thursday. So to give you an overview of what happened today, I got a break-even trade in EU, and I got no trades in GU. So why a break-even trade? Actually, trade was going in my direction before the news, and right after the news, it took my stops, my break-even stops as well as my actual stops, and then it continued to move in my direction. The worst part is I didn't see the news before starting my trading session, so which is the worst mistake I made. And I was lucky because price moved to my break-even point before taking my break-even stops. If I did not see the news and still kept my stops at the original position, then I would have lost more than what I would have intended. So actually, I kept my stops at plus $4, but the revenue turned out to be minus $6. Then you can imagine my minus 1% would have turned into minus 1.5 percentage, which would be, very heartbreaking. Okay, uh, I can't say anything. Okay, let's jump into the fundamentals before jumping into the board. So today's fundamental is, as I already told you, there was actually this is not 6 p.m. This is Indian time. I should have changed this one. This is actually 1:30 p.m., which is UK time. So if this is UK time, 1:30 p.m., you can see of these kind of red folder news, unemployment, CPI, so core CPI. So all these are heavy red folder news and which affected the trade on the day. Okay, let's jump into whiteboard and see what happened on that day. Okay, okay, let me take a pen. Yeah. So the in the daily structure of EU, the swing structure is bullish and the internal is bearish, and the price actually flipped this demand and tapped into the extreme demand. So what I can expect is I can expect a reaction from this demand zone, and then it can push into this supply where it can either respect the supply and push the price further down, or it can flip the supply and then push the price up, forming the next lower high, I mean the higher low. So either of these two cases are possible, but for now, what I know is I can expect a bullish reaction from the market. So I am ready to play that bullish reaction today. Yeah, which is okay. Also, price respected the daily demand. Thus, I can look for bullish reaction towards the flip zone. Thus, longs are hyperbolic today. So the higher time frame objective is set bullish because of daily mitigation, and there is an unmitigated demand to flip above. Because of these two reasons, I'm going to take bullish today. So jumping into the 4 hour chart, the swing structure is bearish. The internal is also bearish. The price is in the phase A2. So let me zoom in a bit. So, yeah. So what I can expect is you can expect the price to chop bullish after taking out the previous day's low. This makes high probability to look for longs targeting the 4 hour supply within the daily supply. So yeah, price is going to take out the as I told you in the daily chart, we can expect a bullish reaction from as the price is in the daily demand, and it can go to the daily uh, demand to supply flip zone. In 4 hour chart, we can see that there is this previous day low liquidity. So once this liquidity has been taken out, that is the sell side liquidity, we can expect the price to push up to take out the buy side liquidity. So you can see that the supply and demand concept is in line with the liquidity concept. So when these two primary drivers are aligned with each other, we can see that the trading probability could be high. So what I can expect is price take the previous day low, and we can look for H1 chalk bullish or something like that, and then we can look to trade using the fresh POI form during the session. So the analysis is very simple. Let's see what happens. Here we go. This is the H1 chart, and you can see my analysis. The price swept the previous day low, chalk bullish, and then the fresh POI here, and then look to enter longs up to this POI. After this, definitely be break even because this is the last level of demand supply that is holding this strong internal high. Yeah, strong internal high. If this supply goes, then we can expect a shift in the if expect a bullish IBOS, and then that bullish IBOS can continue all the way long before it can shift bearish IBOS. That's a different story, but let's just focus on the current price action. What we are expecting is price to take out the previous day low and then chalk bullish so that we can take longs from the fresh POI. Alternatively, if the price didn't take out the previous day's low and if the price moves up and taps into the H1 supply, which means that the price has taken out the Asian eye and mitigated the H1 POI, which also means that the price has taken the buy side liquidity. Now it's ready to take out the sell side liquidity. Where is the sell side liquidity? Here we go. The previous day low, and when the price reaches up to this demand, which means the price has moved up to the premium prices, and this becomes the weak internal low. So a ton of sell side liquidity would be available. So all you need to look for is a chop bearish, and then from the fresh POI, you can look for shorts targeting the weak. I mean the sell side liquidities below. So these are the two scenarios which I was ready to play, and let's see how the price played out. So here we go. Price actually took the previous zero liquidity. So now I can look for longs if the price chalk a bullish right here. If the price chalk bullish and if the price pulls back, if there is enough risk to reward, I can look for longs using the medium time frame right here and then target the H1 supply above. So moving on, this is actually at 8:45 that the price took the previous low liquidity. So moving on. So at okay, okay, at this is not 14:43. Actually, this is actually at 10:18, which is this is actually a by mistake. I wrote the Indian time. This is actually 10:18 GMT plus one. I add a bullish intent coming into the session, but the price is heavily bearish and it's following Wednesday's bearish momentum. Instead of forcing longs, it's better that I follow this bearish momentum till the price reach the extreme forest demand to gain some profit. So it's simple. What I expected today, price should take out this previous day low, chalk bullish, and then I can look for longs, right? But you can see the way the price has moved down, which means it is clear that the London has made the high of the day. This is the high, and price is not going to take out this liquidity. And price is going to respect this high, and probably New York may move to this optimal trade entry point and then push down again. So it's worthless to look for longs, and then I can, and it is high time to look for shorts. So how can I look for shorts? Here we go. This is phase A2, and this is a very good POI from which I can, take trades. So let's see what are the confluences adding up. This is actually phase A2. So let's draw down if they put forward the conditions. The price not reacting off from high time frame POI, it's actually reacting. So this box cannot be ticked. And it is in line with the medium time frame order flow. Yeah, it is in line with the H1 order flow. And the 4 out of 8 boxes are ticked. So this is also ticked. And high time frame narrative support time frame area. Uh, yeah, actually, when I jumped into the 4-hour chart, I saw that there was a bearish order flow and 4-hour external. Sorry, yeah, and actually there was another 4-hour extreme demand. So this demand, which means that I'm expecting this demand could fail, and the sell liquidity below this demand could be used and mitigate the extreme 4-hour demand, and then the price can push up. So simply, I'm targeting I mean the sell liquidity below the 4-hour demand. So it's the same demand that expected to make the higher low. Now I'm expecting it to fail and price to sweep the sell side liquidity below it. So what are the risk factors? So price is in the 4-hour demand. I'm expecting the price to take the sell side liquidity below, but it may or may not happen. And this demand can hold and push the price up. The price is in the 4-hour demand and Asian liquidity is not yet taken. So price can push up, take out Asian and New York can form the high of the day. So that's also a possibility. And Asian range liquidity, yeah, no clear displacement. It's a very wicking. You know, there are a lot of wicks, so it's not a clear displacement. And London has formed an equal highs. So London can form the high of the day, provided it has strong liquidity sweep and then push down. Here you can see that the London has formed a perfect equals. It can be taken out and then the price can push down. So it seems like lower end of medium probability trade, but it's still in the cards. So I need to take this trade. So what is the entry method? The only entry method possible is the M15 LC2 or LC2B. So price can make this fake move and then push up to take out the lid. And then once it takes the lid, I can enter stop sell stop order using the liquidity candle. So that's the game plan is simple. I waited and yeah, here we go. I actually took my placed my entry here and then price took the buy sell liquidity above this lower time frame demand. You can see the pullback here. So if this becomes a very low time frame supply, price actually liquidated this supply, took some buy side liquidity, and then started to push down. So they entered the market, and that too that happened during the New York, I mean, London lull, and I entered on this candle, which is the start of the New York. And yeah, I placed my order, and sell stop order got tagged in. Now I must keep composed and let the odds play out. And the odds did play out. Price uh, went down. This was my break-even point. Since this was my break-even point, and price came down, I kept my stops at break-even. And at 13:30 UK time, price became wild, and it took my stops. And then you can see the big wicks taking out all my stops, and then eventually price started to come down. And after the price took the stops, it started to push down. So take profit. So I'm not saying it's a profit. Yeah, it's a break-even loss, but you know that is what it is. With you can see how the low resistance liquidity being built up everywhere. The price took everything, and then it started to push down. But the thing is, it respected this POI, and then it pushed down. So people, earlier I used a strategy called set and forget order. So in that I used time based liquidities as inducements, and used to place orders and then just forget. That's it. Come at the night and see whether the order got triggered or not. So using that strategy, you can win some profits like this one. So yeah, in EU, that's it from EU. So it's a break-even trade. Uh, yeah, actually, it was a very good trade. The price would easily it may take profit if there was no high impact news, but the high impact news disrupted everything. So it is what it is. So let's jump into GU and see what happened on GU on this very same day. So to continue our analysis on day 113 in GU, and it's no trades on GU as I already mentioned in the overview. So let's jump into the board and see what happened on this day. So in the daily, the swing structure is bullish and the internal is also bullish. The fractal, I can't say it's bearish because there is no fractal pullbacks. There is one single path, and the price is now coming down. So I can't say that there is a fractal pullback, but with this bearish momentum, I can say that the price can continue push down and take out the strong internal low. But at the same time, I must say that the supply is getting weaker at this point. You can see the supply here and the supply here. The supply is getting weakened. You can see the weak rejections. So there is a chance that the price can push up with this demand holding, and the price can make next higher low. It is possible, but we can also say with this could be a short pause in the price action. We can short pause in the price action before the price pushes down. So both the scenarios are possible. Let's not jump into any conclusion. I'll first go into the medium time frame, and then I'll just take my trade responsibly. Okay. This is so daily chart a bit zoomed in version. So if the price chalks bullish, then at that point I would be confident that the yes price has chalked bullish. Now I can go look for longs. But at the same time, I must remember that price can chalk bullish just to grab some buy side liquidity, and then it can start pushing down. So it could be a bull trap. It could be a bull trap. So there is a losing trade coming. So if the price chalks bearish and then continues to push down, if the price chalks bearish and continues the bullish order flow, then that would be a great winner. So that's how losing trades and winning trades happen. We are expecting something. We are expecting the market to do something, but in turn it does something else, and that it ends up as a losing trade. So jumping into the 4-hour chart, the 4-hour the scene structure is bullish, the internal is bearish, and the price has reached the discount prices and tapped into the extreme demand zone. Now what? So the price has swept the sell side liquidity, but it failed to take out this high. So obviously this low would be taken out, and yeah, it's taken out. But there is no body closure. So today I can expect the price to close below, and once the price closes below, I can expect some pullback, and then either I can expect a pullback or I can expect the price to take out this high and then start the bullish. Any of these two cases are possible, but let's wait and confirm that with the medium time frame. But before jumping into the medium time frame, let us gather some more information from the 4-hour chart. The internal high failed to take out this internal low. It just liquidated it. So either price can now come down to take out in a close below this low to prove, I mean, to show that the bears are still in control, or since this high is weak, price can move up, take out this weak high, and then it can continue that bullish order flow, and then eventually take out this strong content. Either of these two things can happen, but we need to wait for it. I can look for longs if I get sufficient confirmation in the low time frame. It's as simple as that. Because I'm trading against the bearish order flow. So I need some confirmations in the lower time frames. Lower time frames in the sense lower than 4 hour, which is 1 hour chart, which is my medium time frame. So this is my H1 chart. The swing structure is bearish, internal is bearish, and let's zoom in so that it becomes clear. So this is the current price action. It's very corrective, and uh, the price has just swept the sell liquidity here, and with this price didn't do anything. It failed to take out this high, which means this high would be taken out. So yeah, one more thing that I must say is that this low, sorry, this high failed to take out this low, right? Failed to take this high, failed to take out this low. So this is weak, and price can take out this high. But at the same time, this high closed below this low. Okay, this high, this low, this is the low, right? So if the price again fails to take out this low, then this would be my first target, and this would be my second target. If the price closes below this low, then this becomes a strong, I mean strong high, and this trade would become in this high. Uh, the naming this high as a weak one would become invalidated. It's as simple as that. So I can look for longs as I got support from the 4 hour narrative kind of support. For longs, ideally, I need to see sell side liquidity being taken and a strong push on the opposite, on the upside direction, indicating that the demand is in control. Then I can look for longs using low time frames, and I have sufficient history of the profit. Simple sell side liquidity sweep, and then push out, fresh POI here, and then target the 4 hour buy side liquidity. It's as simple as that. So if I jump into the session updates, and there is no sell side liquidity sweep, but the price had enough momentum within itself to push the price up. So this is not what I expected because a price didn't sweep the sell side liquidity. So if I can assume that the price has swept the sell side liquidity, but I'm not totally convinced in that sweep because there could be a low resistance liquidity here, and there is another large low resistance liquidity here. So anytime the price can reverse, and my long idea could be invalidated. If the price has swept some sell side liquidity, then I can expect the price to take out this buy side liquidity at least, and then I can look for longs before the price took the buy side liquidity. But now maybe the price can reach for the buy side liquidity here, and then it can chop bearish, and then it can target the weak, you know, internal low. Probably, if that happens, and that becomes high probability short straight for me. So yeah, actually, I was not completely interested in this trade, but still, I just want to play this trade and let my odds play out. So, but all the boxes are ticked for this one. But let's see. Price tapping into the high time frame POI, yes, and high time frame supporting, kind of yes, but not fully supporting. I can mark this as no. High time frame POI with a score of 4/8. Actually, it has score of 4/8. I mean 5/8. So this box is ticked, and it is in line with the medium time frame order flow. So 3 out of 4 boxes are ticked, which makes it as a medium probability trade. So what are the POI criteria? It has swept liquidity, it has displacement, it has made shift in the order flow, and it is still unmitigated, and it is formed during the kill zone. So 5 out of 8 done and dusted. And what are the other confluences? Yeah, there is a ton of buy side liquidity which can be targeted, and it has New York high, low resistance liquidity, London high, equal highs, so ton of liquidity to be targeted, and as low resistance, and it also has positive, divergence with TXY. So so many confluences are adding up, but still it's kind of medium probability trade, but on the higher end. So unmitigated agent loss has risk factors and unmitigated sell side liquidities. That's the main point. Immediately after taking the buy side liquidity, price would rally down to take out all the sell side liquidities. So if you're expecting the price to shoot up with this trade, then you're definitely gonna fail. You must know at least when to back off from your trades. So this was at 9 o'clock, right? 9 o'clock. Yeah. Entry method was using M15 LC1, or if there was LC2 perfect. Otherwise, I can also look for M15 confirmation entry. So anything is fine for me. Kind of low resistance liquidity in M15 here, which means uh, price can easily invalidate this POI and then start going down. So let's not overthink about that one, because there is huge chance of either not getting a trade or price uh, either not getting a trade or me stopping out, because price can take out the sense and liquidity, make a small push up, and tag me in into the trade, and then with this, since there is a ton of low resistance liquidity here, it can push down, taking out my stop loss. So it's high risk trade, but I just need to go on with my odds, and stop following my intuition. But I'm going to stop overthinking, and I'm going to trust my high time frames, and I'm going to look for longs and let the odds play out. So it's simple. And what happened at 9:14? Huge candle. So I didn't take any trades because there was no risk to reward. So I just waited for the another candle to finish printing so that I can take trade on this candle. So did that happen? No. At 10, at the stroke of London, the POI got invalidated and price uh, took some, invalidated this POI. So I could have taken this trade, and after, at you can see price actually invalidated this POI and completely closed below it. So it's not worth taking the trade. So now I can, switch my bias and start to look for bearish trades. Why? Because there is this low resistance liquidity, this weak internal low. So everything is there. So you can look for bearish trades. And with this POI in place, it becomes high probability because it has swept liquidity, chalk bearish. So perfect POI for me to take trades. So phase A2, price not reacting, uh, bias to bearish. So here we go, right here. So this is phase A2. Price is reacting off from a 4-hour demand. So this box is not take. So it is in line with the medium time frame, and this POI as a score of 4/8. How it has swept liquidity as displacement mid shift in the order flow. It is unmitigated and it is formed during the kill zone. So 5 out of 8 criteria met. So this POI is perfect for shorts, and high time frame supporting the medium time frame area. Again, partial because both are neutral. So I can take longs and shorts with this box. So what are the other confluences? Supply chain being respected, and there is no opposing supply. POIs, and there is some time-based liquidity to be targeted. That is Asian lows, London lows, and this is also previous day's low. So and also there is low resistance liquidity to be targeted, and there is a positive SMT with EU. So ton of other confluences also which can play out. So what's the entry method? It's just LC1, and the worst part is the LC1 is too far away. So most probably I may not get a trade. I knew this when analyzing itself that I am not going to get the trade, and it's exactly what happened. So I can take this trade because the price took my lid during the news session, but the risk to reward is not good, and I can place my next order only when this high is taken, which I was not yet taken, and the price was just consolidating within this candle. So it I come to the end of the day with no trades, and yeah, actually there could have been a trade if there was no news, but since there was a high impact news which I didn't realize, there was no trade actually. Okay. Yeah, to summarize, I got a break-even trade in GU, which I lost some part of my capital, which is almost $6, which is around 0.12 percentage of my risk percentage, and there was no trades in GU. So the analysis part was good. I was focused on the chart. I was able to switch bias quickly when the price action improved itself. The thing here is I must be more aware about the fundamentals before I enter the trading session. So today I already mentioned this. I got lucky as I moved my stocks to break even in EU. But the next time I may or may not be lucky like this. So yeah, that's advice for myself, and you can take it if you want. So yeah, see you tomorrow, guys, on when October 11, 2024, Friday. Until then, cheers, guys. Bye.